Good morning, guys. Welcome to this Tuesday, April 8th. And we have an overnight, which is actually reasonable. A little bit of a pop here now, that just going into the start of the analysis here, but a pretty reasonable overnight. Not in any words, a massive, complete debacle all over the place. Still pretty volatile though. But we held on to pretty, a reasonably tight range, and we'll take that. Given the last, this is the overnight. Given the last few days of nuttiness, it's welcome relief, right? So you don't have, I mean, as you can see, these charts are still very much uh, thin in terms of what it's showing because you have all the volume way up here. If you scroll this down here, you start getting some of the volume, right? It's way up here in the 55, 5600 level. So as they took out that 5500, that's when everything just went sideways in a big way. We went from 55, 5600s down to 48 in literally a couple of days. Boom. Unbelievable. But anyway, so at this a reasonably calm overnight, I would say. A nice little pop here going into the open. You would think everything is so oversold, you're going to get snapbacks all over the place. But I mean, I was waiting for it, this snapback kind of stuff. And there's some positive news coming out. There's a lot of talks going on and so on and so forth. But let's just take a step back and realize markets are just like massively overreacting to everything, and it's just and everything gets amplified by algos and machine trading. So it just it creates a massive scare. You can't react, you can't trade it, you can't react to it. You just kind of have to, unless you have the speed to be all over on top of that, you can just kind of take a step back and wait for things to calm down a little bit. The news this morning, not much. We had the small business optimism number came out at 6 a.m. and that was a 97.4, expected 98. So that was a decent number, a little bit on the weak side. We get a 3-year auction at 1, and that's about it. Tomorrow we also have pretty light news day. Not much going on tomorrow. Then we have the CPI and PPI print on Thursday and Friday. We'll see if the market has calmed down enough by then to give us a reaction on that. But I mean, watching the market right now, it looks like there's a risk on kind of a feeling in the air, popping this to the upside. So F1 doesn't give us a whole lot of information unless, and using the F1 here to get some sense of where we start seeing something, looking at that at 5500 level. So this were the areas where we had to get things to work out. If I split out the B print there, like so. So this is the area where they started taking out the 55, 5600s. And if I make this just a little bit bigger, he keeps recentering back down there. I'm going to drag it back down again. So you can see here's that big retest area we were looking at. That's your 5730 level. And here's that crazy stuff when we're starting getting really down to the lower levels, 5550 to 5500s. That's where they kind of had to hold the line. And when the tariff announcement came out, everything else went sideways from there. So if they can start getting up above that 5500 level, yeah, I'd start thinking that we may have something real going on. At this point, it's anyone's guess where they're going to go, how long they're going to stay down until we get some good news. The prices on stock, however, are way down, and it's if you have cash on the sidelines, this is almost a generational buying opportunity. It's rare, you get this kind of a retracement on some of those big tech stocks or other big companies which are trading at pretty low multiples right now. Anyway, so I would start off range bound, and I would kind of just follow the short-term trend. I mean, technically, you want to trade this on the short side of the market, but it's so oversold, like snapbacks are going to be there. And right now, it looks like we are looking at exactly that right now. A little snapback going on. Started off here right at the 7, running from 5170 to 50, almost 100 points up right now. Crazy, huh? So it's still pretty volatile, and I would just kind of stay on the sideline a bit and see if it calms down. Maybe an opportunity for trades today if it comes down a little bit further. But if the bars looks like this in the overnight, and these bars, looking at these smaller bars, this is 08 up to the 17s. So this is 10 points right there, that little baby bar. So bars are still pretty freaking big. But if it comes down a little bit, starts looking like the trading is getting a little bit more sane, yeah, I would be maybe engaging the market. We'll see. Just be mindful when you do that. Make sure you trade with a stop and don't mess around with a stop. Moving your stop and it's like this, it makes your stop huge. So if you get in on the trade here, just looking at where you need to put your stop, and if you say you bought this one little break up here at the 33, your stop needs to be below this rotation. So 33 down to 18, you need to be a stop at 14, 15. So you're looking at 15, 16 point stop to trade that if you're going to have your stop on the right side of the rotations. So that is how crazy that is. Trading with a 5 point stop, I'm 1/3 down and just lucky if I stick in that trade. So you don't want to trade just relying on some luck to stay with the trade. That usually doesn't work out very well. So I would start off range bound. I would look for a little bit of strength, a little bit of a retracement today. See if we can get some action going. Watch these. We have the best shot I have is really the support areas. If I had to look and show you that capital flow, these areas here at the 5,000 to 5,000, 5,100. If that general area starts coming out, I would start worrying about it's them selling it off again. So you have a nice little volume pop here at the 51, 51.10. That's your low in the overnight. So if that area comes out, the next level down is the 50s, 70s, and there below that, I think we may be in trouble again. So that's the area I'm watching now for a potential shift back to the short side and further selling. And this can happen super quick. I mean, you saw how quick this happened right now. This is up to 52. Now this at 200 points. You can reverse this literally in a couple of bars the way this is trading right now. So also the other concern is headlines. As headlines keep coming out, and yesterday, this big freaking pop, you see this big C print pop, that was just a fake headline came out. It's like a headline which wasn't true. And the fact that people still go out there and report stuff like that as fact and then create issues like that, it's just something you have to live with. But you have to be real careful when that happens. Because you're on the wrong side of a trade when that happens. You literally blew up your account, you got auto liquidated, and you are out. That's how fast that went. And you're sitting there watching what happened to my trading account. But that is exactly what can happen if you're on the wrong side in a trade like that, right? So that's why I kind of emphasize very cautious trading, and if it stays volatile like this, stay out of it. If you start seeing some reasonable trading, fine. But when the trading starts getting crazy, then just kind of take a step back. So looking for some strength today. Let's see if they can keep this going, or if we're going to get the weakness right back down again. And at this point, you have a little bit to lean against. If they start trading below that 51.90s, go back range bound. If they start trading below the 50.70s here, the lower end of the range, and that's when I was talking about here, this 57, 5100, 50.70 level. It starts trading below that area on the lower end of it, that's when you need to worry about the potential short side of the market again. And there's a lot of range going on right now, a lot of range. But you have for the first area to pay attention to is if it retraces back below the 51.90s, all right, then you take off the long bias. If they start trading below that 5100, start thinking about short side of the market at that point. So that's how we get started on the ES, looking at the NASDAQ and the bonds. Bond market is still heading lower. Yeah, still it's squeezing this. So the fact that they're trying to get these rates down so they can refinance debt at lower levels is okay. That they were up here way up at the 121. The yields came down below 4%. Now they're probably right up about 4% again. So technically we pretty much retraced back to value, back to this attractor area. Now, if they keep going lower, that would be a source of concern. So if they take out this ledge here at the 115.15 and starts trading down to the attractor at 114.23, I would start getting a little bit concerned at what the bond market is up to at that point. But right now, the flight to safety move seems to be reversing a bit, rolling out of that into equities. And I would just watch if he is going to take this the bond yields higher and the bond prices lower. That is the concern. But starting off from the short side, at this point, we are down at support at 1624. This could hold, but looking to get short against the 17s, 1707s for rotations back down. That's about it. Fairly aggressive on shifting that back from looking from the short side back to range bound, since this is an attractor area. So if this turns out to be an edge, they're retesting at 24, and then for looking at the rotation back to the 16, 17s, fine. If that's the case, then you don't want to be trying to sell into this any further than that. So if it bounces off this guy, getting short against the 17s and 1706 to 7s should work for a rotation back down again. And if it doesn't, then you're on the wrong side of this, and should be, and then you're going to move it back up here to the attractor at 117.16. So that's the bonds. Let's see if they can take this further. But at this point, starting with a bias to the downside to see if they can take down these lows. If this turns out to be a retest failure setup, quite there. You see that building value right here at the lower end of this range. So definitely looks like they're trying to take it lower. So we'll see. But if they can't, looking for rotation back out to that 17, 16 level, and looking for shorts against the first two levels here. If they trade above that, I'm taking off that short bias. On the Nasdaq though, big moves on the Nasdaq, and the same stuff's going on there as the ES. So big moves to the downside. If they trade below that, the 17,880s. I will take off the long bias, starting with a slight bias to the upside now to see if they can retrace this further. But if they start trading below the 880s, take off that long bias. And if it starts trading below this area, the 640s down to that 530, so 17,500 to 17,600, so 17,500 to 600, this area of support. If that comes out, I would start thinking about the short side again. And Nasdaq is moving like crazy, so probably not touching Nasdaq today. That's pretty moving pretty hard as it is. So pretty good. But both ES and Nasdaq has reasonable overnights, so it's not like it's like absolutely off the charts crazy. So, but it's pretty volatile still. So starting off the ES and Nasdaq with a bias to the upside, let's see if they can retrace this further. Watch those levels of support on the way down. If they trade below that 880s on the Nasdaq, or below the 551.80, 51.90s on the ES, take off the long bias and go back range bound, and then let's reassess from there. Finally, oil and gold. So both of them are actually not too crazy. They're pretty volatile as they always are, but not off the charts as the ES and Nasdaq has been. So it looks to me like they're trying to retrace this back up again on gold. Let me see. Split out the Y period right there. There you go. A bit slow on that one, and then gold looks to me like it's they backed off these highs, but they're back in this attractor area. So the lower end of this range is the 2990s. Upper end of this range, it's going to be the 3050 to 60s, and they're pretty much in the middle of it now. So I would start off range bound at this point, looking to fade levels up to that 5060s, and buy down to the 3000, down to the 2990s for rotations back up again. And let's see if they can break out of this range. But this feels very much like they want to stick around in this area. So initially looking for shorts against the 35s, 40s, 50s up to the 55s. Looking to buy against the 18s, 10s, 9 to 10s, the 3003s, and then to the 95s there. So that's how we get started on gold. Fairly straightforward. Let's see if they blow through take out the 50-60s on the upside, or trade below the 29.90, 95s on the downside. change you by start trading in that direction. So that's gold. Looking to sell strength at this point, the 30s, the 35s, 41, 42s, 49, 50s, 55s for rotations back down. Looking to buy against the 18s, 8 to 9s, 3s, and the 29.95s here for rotations back up again. So that's gold to get started. I'm starting range bound on that guy, given where they are. And on oil, buys is still to the downside. Had a pretty good pop. Excuse me, pretty good pop here on the at the fake headline. Right back down again. And I would say that it's probably fear of global recession that's driving all down, because you can see when a good headline came out about dropping the tariffs, oil popped, and that just tells you that, okay, so it's some kind of recession fear going on there, and if they alleviate tariffs, that's not going to happen, so pop to the upside. I would not quite buy that analysis, but it's what the market is trading on. So again, watch that stuff with caution. Oil, however, I think is tradable. It's definitely not going absolutely nuts. But if you have headlines, it can pop like this, like it did yesterday, and that could also put you in a really bad spot. So look to sell strength on oil, looking to get short against the 61.50s, 61.75s, 62s, up to that 62.40s. Above the 40s, I'm looking for retracement trades to the upside at that point. So looking for short setups against that 61.50s, 61.75s, 62s, up to the 62.40s for rotations back down. And buying against the 60.60s, 60.20s for rotations back up as well. I should have adjusted that. I may have an edge down here as well. I'll put it back in again since I have it. I was going to put an edge down there as well. I'll cover that low end of yesterday's day session. It could be a buying opportunity. So buying against the 6,000, the 60.60s, 60.20s, 59.90s for rotations back up. And I would say below the yesterday's day session low, the 59.80s, I would lean in on the short side on oil and see how far it can take it. But definitely oil down in the 60s, we'll take that any day. So even if the reason is a little bit crazy, but we'll take it. So oil and gold are reasonably tradable. We'll see how they kind of shake out here as the day starts, but not totally off the charts. Bonds are tradable. ES and NASDAQ is borderline right now. They're still pretty big bars, but it's not off the charts crazy. So I'll be watching it and see if it comes down and the bar starts getting into the kind of a normal volatility range. I may try something. Also watch the the margins coming out if there are margin updates. Because if the margins are up to like 2,000-3,000 per micro, then it's going to be difficult to put on more than one or two lots unless you have a huge account. So, alrighty, guys, we will wrap it there for now. So good trading, and so starting off with a bias to the upside on the ES and NASDAQ. Watch that area 51.90s on the ES and 17.890s for the NASDAQ. If they trade below that, take off the long bias and go back range bound. Alrighty, guys, we'll wrap it there. Good trading, and let's see if this can calm down a little bit so we can get back in the game again. All right. So I'm proud of myself. I'm not going to be. I haven't been stepping into it as I usually do, trying to be aggressively trading crazy volatility like this, but and probably saved a few bucks doing that. But anyway, we'll see how things shake out. I will see you back at 11:30 for the next update. Later.